Hey. I'm a cool ass nigga, but my bitch bad. Whiplash, driving 95, I had to zigzag. If you ain't fucking, then it's cool, it's a mismatch. Switch that, 2 freaky bitches.
Hold on, run that back.
Smash a pedal on the hoe, I make a sick.
Run that back one time.
Hey. I'm a cool ass nigga, but my bitch bad. Whiplash, driving 95, I had to zigzag. If you ain't fucking, then it's cool, it's a mismatch. Switch that, 2 freaky bitches at the kickback. Big chain on my neck, I feel like riff-raff. Smash a pedal on the hoe, I make a sit back. You want a nigga with some cash or a six-pack? I'm eating good, where the fuck you think I live at? It sound like wine CMB, I make her bed ride. We in WrestleMania, she in the headlight. Twin Glocks, 2 shots, feeling like I'm Tupac. Slam a nigga like I'm YSL, you niggas been pop, big rock. Jumping up and down on a big shot. I'm in the corner with a Drake, sitting pink drop. 2 golf hoes in my face, trying to lip lock. Being clock, getting up.
Fuck, man, it's a Friday, dude. God, don't worry about what song. Oh, you want to hear that one more time? Just the intro one more time. It's gonna be bumping.
I don't know nobody.
Hey.
I'm about to spam it, man. I'm about to spam it, baby.
I'm a cool ass nigga, but my...
I'm about to spam it, man. What's good? DC the Don? That's a ball number. Who said that? What's good? What's up? Welcome back to the stream. Hella first chatters. Miso with the first chatter. Welcome, my brother. Pack with the first chat and the gifted. Welcome, man. It's a Friday. Guys, I don't know if you are also feeling what I'm feeling, but it's been a long week. It's been a long 2 weeks. You guys feel like it's been a long 2 weeks? I feel like it's been a really long 2 weeks. 2 weeks, 2 months ago, all we talked about was Pump Fun, and then we started sprinkling in a little Pete Hegseth, Dario, and then now we're talking about the Strait of Hormuz every day, and it has been a crazy 2 weeks. It really has. Pat! Thank you for the 5 gifted. Bro just showed up. Where'd you come from? First chatter. Where'd you come from? Where you from? What's the deal? Smiley Capital 20. I needed it, man. Smiley with a big 2-5. Shout out to Smiley. That brother must have a fucking, Slim. What's good, Slim? The first chatter. Welcome to the fucking stream. Welcome. Where'd you come from? It's me, Rectal. What do you mean it's you, Rectal? It's Pack's room. I just took the company account to throw out some gifts. Oh, Pack Rushcom. That's funny. That's awesome. Are you aware? No, I'm not. Smiley, thanks for the gift that I appreciate it. All right, welcome back. Here's what we're gonna do today. It's a Friday. Usually Fridays are chill, but ain't shit chill when the markets are moving like this. There's nothing to be chill about right now, and that's fine. I'm cool with that. You know, I can bang in that universe. We are getting into a bizarre spot. I actually look. I'm gonna be honest. I am. Do I look fucking tired or no? Does my face look crazy? Do I look crazy or no? Be honest. I look crazy? Yes, I do. LOL. You look cute. You look, thanks. A little dark under the eyes. All right, guys. Damn, man. Yeah, good. I should look like that because that's like what I've been fucking doing all day. It's monitoring. So it's been a crazy 2 weeks. Here's the deal. We got... Bro said if I was a void, a dash of chopped. All right, look. That's how you know I'm locked in, okay? I got like 45 minutes to talk about war, and I'm going to just get into it right now. And then immediately after that, we have a guest who I actually wanted to come on a long time ago, kind of ghosted me, and then I made a tweet today about Sailor, and he's coming on. And so it's this guy, Jeff. Punter Jeff. He runs a Bitcoin treasury company, I know, but he runs this like True North podcast. It's like the biggest Bitcoin podcast. He's the biggest strategy bull in the world. and he's gonna come talk about Stretch, which is Michael Saylor's new financial alchemy on Bitcoin. And now, look, you guys know we don't spend that much time covering this stuff, this strategy stuff, but dude, he's buying like multiple billions a day or a week. Like he's buying multiple billions a week again, and it wasn't the case before. They put out this new product. It's some legit alchemy, and it's having a meaningful impact on the Bitcoin price, like a legitimate impact. Like he's the bid, and we went to 73.5 this morning, I think. Saylor has a fucking printer again, and it's actually worth discussing. And so I figured it's Friday. The guy wanted to come on. Let's just bring him on, and let's cover. This is what I like to do with these streams. Is I like to cover something quick and early, and then we can like refer back to it, and we sort of build the groundwork. So we have 45 minutes to talk about war, and then Jack, tweet if you can. Tweet. 45 minutes to talk about war, then we're gonna bring this guy on. So, all right, let's do a quick roll call, and then I don't want to waste too much time. Roll call. Who's here? Cosmic Waves, what's good? Hidden Character, what's good? Bunny Boy, what's good? Fiblet, my brother. Maddie, what's good? Haley, what's good? Tom Brady, Jackson Ray, Katsu, Poka, Hey Cyrus, Joey, what's good? See you later, what's good? Bloom, Joey, I gotta text you back. My fault, twin. Darth Yoda, Spicy Meatball, what's good? Alp, what's good? Star-Lord, Kira, Kevin, Rockefeller, Sparky, P. Rich Enter, what's good? Pegasus, what's good? Cold Money, Charlie P, what's good? Juice Cardi, all right, let's go. It's been a crazy 2 weeks of stream. I think it's been two of the most. I feel like I've learned more in the last 2 weeks than I did in 4 years of high school. I'm just gonna keep it a stack, and it's gonna have important impacts on our career moving forward here. Quick update: market's about to close, and people are rushing to sell risk into the weekend because Trump gets 48 hours to fucking do whatever he wants. Trump gets 48 hours to do whatever he wants when the weekend comes. So nobody wants to hold risk into it. And I don't fucking blame him. Part of the reason why is this chart looks like this. This is the crude oil chart, fellas. And it's at $96. It's candling. This is the 5 minute. This is the daily. Gnarly. Here's the 1 hour chart is probably the scariest. Gnarly. Just disgusting on oil. Just higher, leg. And then this is SPY right now. And man, it looks like it's about to get sent. Yeah, it does. This is the SPY chart. And did I sell? I haven't sold oil. Look at SPY. Scary. That's the daily. Here, what's good, Wavy? Here's the SPY weekly. And then the monthly is disgusting. Here's the monthly. It's ugly. Now, all things considered, it doesn't feel that ugly compared to what I think is. Look, I'm going to just make a quick disclaimer before I fucking talk about the Middle East for the next 35 minutes and say that I don't know. I have 2 weeks of geopolitical knowledge. I say this every time just to preface, because I don't want anyone to like get too ahead of themselves when I talk about these things. But I feel like I've learned a lot. My eye has opened up the last 2 weeks, and so I'm gonna go over prices and I'm gonna give you some takes. So SPY looks like it wants to die. Software ETF is just disgusting. Worst dead cat bounce of all time. The Dow, literally no Calvin. We have the Bitcoin guy. Calvin, we'll do Calvin next week. There's no reason for him to come today. Fei Zhao wants to come on next week. We're gonna get back into it next week, but we'll save him for escalation. The Dow may never surpass 50,000 again. Coming into close here, Bitcoin looks fucking good. My chart's a mess. I'm sorry. Bitcoin looks good. Gold off a cliff, not great. And then individual names: Nvidia, ugly. Adobe, ugly. SanDisk looks good, great. Apple, ugly. Just like a bunch of blood here on big names. Amazon down 1 again. Tesla down 1 again. Google down 1 again. Like nothing really looks very good, honestly. A few of these, Micron looks good. Semis look good. Here's our chemicals, which have just been limit up, basically. Pause. What did I say? I don't even know what I said. Defense is ugly. Palantir's getting that SAS dump. Lockheed ugly. Raytheon ugly. And then energy, as we know, is just fucking candling. So here's what I want to say today. Is some really good tweets have come out that echo my sentiment. We could start with Donald Trump just did a podcast with Jake Paul. Like right now, he did a podcast with Jake Paul. There's always a bull run somewhere, but I'm seeing nothing. Well, it's in oil right now. He has a Kobe story. I want to hear the Kobe story.
Heard a rumor about you like helping Kobe
and then I'm gonna rant.
one time at a game. Is
That
that
was
a
a
true
long
story?
time ago, right? That was.
Is this a
Yeah,
true story?
well, it wasn't a fight. I was breaking up a fight,
Okay.
which sometimes is more dangerous than being in a fight, right? But no, I like Kobe. Kobe was having a hard time with somebody, and it worked out fine. But yeah, I broke it up. Probably not a smart thing to do. Historically, it's never good to break up fights.
Yeah.
Type of foreshadowing. But so Trump just posted a pod with Jake Paul, which is like, look, I'm not gonna go too over crazy about this because I don't know. I'm not gonna get in the weeds, but I think that there's a take to be had here. Twofold that I think if there was one learning that has been the through line for this like oil trade and our coverage of the Middle East, this to me is like the learning. Twofold here. Number one, what is this tab? Oh, we'll come to that. Number one is this tweet, which is everyone. No, this isn't the tweet I wanted. This sentiment does not equal positioning. Most people will never understand this. I think this is the problem when we do the whole crypto sentiment, like market sentiment. Everyone's bearish on CT. I have never articulated it this eloquently, but this was definitely the case after 1010, which was that everyone in crypto was kind of bearish. Everyone was like, fuck, like what now? This place is a mess, this, that, the third, and 9 times over. But everybody was fully exposed to the market. Everyone was fully positioned. Everyone was fully allocated, and nobody really took risk off the table. They just were kind of bearish. And then Bitcoin falls off a cliff, and you're like, how is that possible that Bitcoin fell off a cliff? Everybody was bearish. And the discretion is what people say with their words, and then what they do with their actions are not the same thing, right? Like what people think that they want, and then how they vote with their money is different. And I think we realized it in crypto. And there was an argument to be made that it's happening right now in stocks, which, look, I'm not going to be fucking Michael Burry here and try to short this thing that never goes down. But everybody is talking on Twitter as if they're bearish or uncomfortable or like feeling the heat. But everybody's holding risk. Like I did this with Bitcoin over after 1010. I was fucking kind of bearish, but I'm fully allocated Bitcoin, never sold. And this is definitely happening right now in stocks. The other tweet that I had on that I liked was this double bear. Let's just go full kind of bear pill for a minute here, just for fun. Everyone's positioned out of fear of missing the big green reversal candle, but each day we don't get it, we slowly capitulate lower. Okay? And then I was going to start the stream with a rant on this. And then right before stream started, Thicky made this tweet, and I had a convo with him about it in DMs. And I think it's like the tweet. This is like the tweet. It's the tweet. And it reads, people don't realize how bad things are because the Trump admin interfered with the very system designed to inform everybody how bad things are, i.e. the market. Follow up. They PvP'd the people whose job it is to signal information to the rest of the market So it's taking a lot longer to disseminate, which reflexively makes things even more bad. You think Besant would have told him this was maybe a bad idea, but perhaps he really wanted to stick it to his ex-colleagues. And so the feeling here is that like everybody was posting this about the manipulation that was happening in the oil markets, and that the dump in oil, and by the way, we're going to just candle. I think it's still technically conspiracy, but this candle, red candle, is like a lot of the smart people on Twitter are widely in agreement that it was Scott Besant in the order books with billions of dollars in margin, PVPing the price down, which is unprecedented. I'm not even sure I understand the full implications of what that could mean. But it sort of leads me to this feeling that, like, all right, we started covering this war on like March 1st, right? It was Monday, 2 Mondays ago. And from the very beginning, from the very, very, very beginning, at least in my brain, our consensus in the stream, and look, some of you guys here probably know way more about geopolitics than I did. I kind of knew nothing on Monday, and now I know a little bit less than nothing. But even on just like a quick snap read, I'm sitting here like, dude, everyone's posting this thing's going to be over in 72 hours. This thing is not going to be over in 72 hours. I'm sitting here like, there's no way. And you guys are kind of like, yeah, I don't think there's any way either. This thing is over in 72. But then you would pull this up and you would look at SPY and you'd be like, well, Monday open is right here. And so the market thinks we're fucking fine. So how could you disagree with the market? Like, who are you to say the market's wrong? All these funds and these algos and these big money, like, who are you to call the market wrong? Right? Which is a very fair rebuttal. But you got to take, like, I'm starting to really think about this here. Really, like, take this into account. That this could, like, what if he's right about this? That the market is no longer efficient in the way that it was before because they fucked with it. Because the reason you got to give this some validity is, what the fuck was this? Like, what happened here? How was this able to, like, trade here for like 2 days, 48 hours? How is this able to trade here for 48 hours? Because you look at this and you're like, how is everybody so off sides on this? And I think that there's some real substance to, like, they weren't off sides. They shouldn't have been off sides. But this was fuckery, dude. This was fuckery. This included Besant in the order books. This included Chris Wright posting fake headlines. This included a fake Trump taco. Like, there was fuckery in the truth signal being the market. And so it put everybody off sides and allowed us to, like, get entry in here. How did we get entry here? We shouldn't have been able to get, we had absolutely no business getting entry here, and the market had no business being this disconnected for 48 hours. I was almost like, I'm almost saying to myself, I'm retarded, because there's no way it's like this easy to just enter into this. But it was, because something happened that shouldn't have happened. A bunch of things happened that shouldn't have happened. And then you look at this tweet and you're like, all right, maybe he's just right that the market isn't as efficient as it should be because it's been fucked with. And you can't just look at it to get, like, usually that's, at least in my knowledge, I would look at it and be like, okay, how bad is the war? And then you look at the market and it's like, okay, the market fucking tells you. But it doesn't feel like the market is telling us, because we're fucking monitoring the situation. And I'm looking at the situation and thinking to myself, yeah, it looks pretty bad. And market's like, plus 1% today. It's the joke. Everyone's like, everyone like makes the joke, like, you know, Iran launches a nuke against the US. SPY minus 0.2%. It's like the base 16Z joke. And it's how? And so I'm trying to figure like how to articulate it. But where I am at right now, and I haven't sold. It's starting to become a significant. It's starting to become a big trade at this price. It's becoming a big trade here. At 90s, it wasn't really enough. I'm like, fuck it, I'll hold it. I made it this far, and it's starting to become a big trade. And so what I'm trying to figure out, and hear me on this, is that I think there is a significant spread right now on how people are positioned in the market holding risk assets versus how out of control things have gotten in the Middle East between Trump and Iran. And there's a lot of delta between the two, I think. And figuring out the best way to express that is probably the trade here. The trade might just be to sit in cash. I don't really know what the trade is, but that's the spread to me, is the separation between how people are positioned and then how out of control the situation has gotten in the Middle East. Because, guys, I think it's kind of gotten out of control. And I was ready to sell this morning. Okay, I was ready to sell this morning. The reason I was ready to sell this morning was because, oh God, we'll watch these in a minute. Let me see. The reason I was ready to sell this morning was because of this. Let me see. It's because of this. So China's getting through the strait. And allegedly, India is also having a couple ships approved to get through the strait. And so my rationale is like, okay, RR-wise, if oil gets too high, Trump pulls a panic lever to just fuck you. He preliminarily ends the war, number one, and just says, declares victory, oil gets crushed. And then number two, he puts price controls on oil, which is like drastic, probably doesn't happen, but it could happen if it gets bad enough. And then three, and the most likely, is that a U.S. escorted ship gets through. Even if just one ship gets through from the U.S., oil is going to get destroyed. Now, one ship getting through doesn't change the fact that we're missing, we're like 200 million barrels of oil short. There's going to be long-term stress on the supply chain, and there's oil missing. But remember, we're trading headlines here. We're not, we were trading the math. Look, we're trading the math right here. At 84, it's like, dude, the math doesn't make sense. It's got to pop. We're trading math. But at 96, 100, we're not trading the math, because trading the math, once ships start getting through, is you're holding for like a 6-month spread on the supply chain is fucked and oils and you're trading for long term. It's not my game. We're trading headlines. And so the second a headline comes out that a U.S. escorted ship tanker made it through the strait, oil snaps down. I want to be out before that. And so when I saw this and I saw the India thing, I started thinking to myself, man, I think this could happen soon. And I think I could get headline fucked here, and I kind of want to get out of it. But then I watched everything else, which we're about to watch for the next 20 minutes before we have a Bitcoin guest come on. And I just sat here and I thought to myself, dude, I think the market is just not positioned the way that it should be. It's not. It's not giving this the credit that it deserves. Because right now on Polymarket, there's almost a 70% chance for boots on the ground in Iran. 70% chance that U.S. forces enter Iran. Is the market positioned for that? No, absolutely not. No, it's not. It's not. Should crude be 96? Look, I know nothing about crude. Should crude be 96? No. The market is not positioned for a 70% chance of boots on the ground. It's just not. And then what's the other market I like? Is there ceasefire, I think. Right, let's see by volume. Here, ceasefire. It's low. They're saying this is only a 40% chance by April 30th. It's low. And so is the market positioned for this? I think absolutely not. It doesn't feel like it is. It doesn't feel like it is. Like, if this is really true, if there's really a 70% chance that we put boots on the ground and a sub 50% chance, a sub coin flip, that this thing is done by April 30, I don't know what the price of oil is. And so I just sitting here and thinking to myself, there's a lot of fuckery that could happen, but I just don't think enough people are taking seriously how out of control things have gotten in the Middle East under Trump's watch. Because usually you can just fucking taco your way out of it, but you can't taco your way out of an atoms war. That's the thing about bits to atoms, is like, fuck, you can't bomb bits. And so this is kind of where I land, and by saying I don't want to sell I'm not selling it into the weekend. I might panic and sell it. That probably might happen. So don't position because of me. But I don't really want to sell because I don't know. I feel like the market is, for whatever reason, is not taking it seriously enough, because the market is no longer designed to be a truth serum. It's designed to be like a proxy for Trump acceptance rate and his ability to like fajangle with shit. And so I'm chilling my stop, and I'm not going to lose money on it. It wasn't enough money at 92 for me to sell and be happy. Like, I'm just like, fuck it. It's now becoming a large position of mine, and I'm just going to sit in it for now. And so this tweet, I think, is really important. I think it's really important. And I think that I've said it a million times. I was DMing Thicky, and he's like, yeah, you've been harping on this. Like, crypto traders are uniquely positioned to trade fuckery manipulation. They are. Fuckery manipulation. We are uniquely positioned for this. And so let's watch some clips. We have 18 minutes before Bitcoin guest comes on.
It is.
So this is the first clip. So Pete Hegseth does a fucking let me just make sure I sent the thing. Okay, cool. Pete Hegseth does a speech every day. And this is the first thing he said today. I almost couldn't believe it. I saw this and I'm like, bro, they're not getting through.
The only thing prohibiting transit in the Straits right now is Iran shooting at shipping. It is open for transit should Iran not do that. The only thing.
Did you hear what he just said? Seriously. This is not the SNL. This is not Colin Jost or whatever. This is Pete Hegseth.
The only thing prohibiting transit in the Straits right now is Iran shooting at shipping. It is open for transit should Iran not do that.
It's like the only thing prohibiting hikers from going up in the mountain is the grizzly bear brutally mauling everybody that steps foot. Other than that, the trail is open for hiking. What? Yeah, the water is safe to swim in other than the shark infestation. Other than that, you're good. It's like, what are we doing with this? It's like, yeah, my portfolio is green except for the red trades that have pushed it into the red. What do they say? If my aunt had a dick, she'd be my uncle. Is that what it is? If my aunt had a dick, or if, yeah. It's like
Sizing.
And so then there's this.
And as the world is seeing, they are exercising sheer desperation in the Straits of Hormuz. Something we're dealing with. We have been dealing with it, and don't need to worry about it.
Like, I'm telling you, my finger is on the sell button, and then I start just watching these clips and thinking to myself, why is the market not lower?
And as the world is seeing, they are exercising sheer desperation in the Straits of Hormuz. Something we're dealing with, we have been dealing with it, and don't need to worry about it.
Don't worry about it. What do you mean don't worry? How could we not worry about it? And then there's this one, which is crazy. Watch this one.
Yeah, right here.
You have said that the U.S. military has essentially aerial superiority, naval superiority over Iran, yet we're not escorting ships through the Strait of Hormuz. Why? How did you not plan for this?
We planned for it. We recognize it. Because ultimately we want to do it sequentially in a way that makes the most sense for what we want to achieve and ensure that we're sending the right signals to the world when we do so. So when Chris Wright speaks or we speak, it's based on a full assessment of what we're up against, what we want to say to the world, how that we want them to see and understand the conflict. It's like this whole idea of the war widening. That's what the press wants to make it look like it's widening and chaos is ensuing. No, we're actually closing in on grabbing hold of and controlling what objectives we want to achieve and how we want to achieve them. It's called shaping operations and setting the conditions. But when you
Guys. It's called shaping operations. Okay.
shape the environment, you don't always tell. I mean, foolish political leaders and foolish military leaders of the past will hang an exact deadline on it, or here's exactly when we'll do what we're going to do, or here's how long it's going to take us. And then if you meet that, maybe you meet it, but if you don't, you fail. And if you're far beyond, we know exactly what we're shaping and why. We're sending those signals working across the interagency. The Strait of Hormuz is something we've paid attention to from the beginning. And the American people can rest assured we will ensure that our interests are advanced, no doubt.
Colin Joss just secured employment for the next couple of years. And then I have one more clip. This one's dark. Brace yourself. I have to find it. Hold on. Wait. Let me find this one's important. I lost it though. No, somebody asked him how many soldiers are dead. And he wouldn't answer. It was kind of a dark clip. Where's that fuck? No. Hey, Tulip King or Daniel, see if you can find this clip for me. Oh, here it is. 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 This was the last clip.
No doubt. Yeah, right there. Green jacket.
Mike Bress with the Washington Examiner. How many American casualties have there been, and where were the American service members when they were injured?
I mean, it's a bunch of return to duty. So we've had the large majority have gone in for some medical treatment and return to duty. We've had in Kuwait, Jordan, down across the southern flank a little bit, a variety of places, most from one-way attack strikes.
But I want to clarify that. I think what we've
And
tried to
Saudi
do
Arabia.
here
Somebody
is
asked
clarify
Saudi
those
Arabia,
numbers
yeah.
rather than saying
Yeah.
KIA or WIA wounded. Be more clear about that because the overwhelming majority, almost 90%, no doubt. Yeah, right there. Green jacket.
No, it won't answer. Bizarre. I mean, I don't know. Is that bizarre? There's no answer. And so, yes, 6, rest in peace, Americans got killed yesterday in this plane that we're calling like a friendly fire accident, the second friendly fire accident of this war. And so then you think to yourself, really? How is that possible? Is that true? Like, I'm not here to speculate on deaths, right? This is serious shit. I'm not here to fucking push an agenda, push a narrative. I'm just trying to figure out who is more offsides, the market or the comments being pushed from Hegseth in them. And so I was ready to sell, my fingers on the button, And I am watching this interview and I'm just thinking to myself, nobody's positioned for this. Everybody's positioned for Trump taco war over. Nobody is positioned for this thing. It's gotten out of control and we don't have a snap call solution. And so the question that I'm going to leave you with this weekend, I'm not wrecking stream, but the question I'm going to leave you with this weekend, it's probably like the question, is if that is true, that there's this great spread between how everyone's positioned and everybody realizing that the situation in the Middle East is spiraled out of control, what's the best expression of it? Oil is a scary one because they can fuck you. They can actually fuck you in everything. They can fuck you in everything. They can fuck you in SPY. They can fuck you everywhere, being short. But they could really fuck you in oil, especially up here. It's harder to fuck you on like a great deleveraging of stocks, at least up here. But are you really going to be Michael Burry and short the stock market? I'd rather be long. But then it's like, okay, you want to buy bonds? No, you don't want to buy bonds because I know nothing about bonds. But the whole thesis on bonds is like trust in the U.S. currency. And the question is like, this is a great decoupling of trust in the U.S. economy. If this is actually the case, if they're fucking and jangling with the market, you can't trust the prices, the situation is way worse than the market is implying, then you don't want to buy bonds. And so what the fuck do you buy is, I'm like, fuck it. I'm not selling the oil. I might be wrong. I'm already satisfied that we got this far. Honestly, I'm satisfied that we got this far with our analysis. Did the math. We got this far. I'm fucking satisfied. We were right. We got this far. I'm satisfied with it. If I get stopped, then it's fine. And then, dude, probably fucking Bitcoin. Okay. I have one more clip for you. This is more down the conspiracy rabbit hole, but it's a must watch. Ready? I think a couple you know what I'm about to play.
I listened.
All right, watch this. This was yesterday. When did this get posted? Like yesterday night. You tell me if things are under control.
I listened to you on the.
The president wants you. Sorry, the president wants you right away.
Oh, okay. Okay. No problem at all. See you shortly, Mr. Secretary.
You can work that in.
Mr. Secretary, I have to say, it's a first, I'm sure a last as well, that an interviewee's been pulled away to go to the Situation Room. How was the president? Was he stressed?
No, the president is in great spirits. The Iranian mission is proceeding well ahead of schedule, and I have to tell you, Wolf, that I have a teenager who's considered.
I mean, he's visibly trembling in his voice, and then watch what he says. Watch what he says. Listen to what he says.
That I have a teenager who's considering military service, and I could give this team my highest compliment, from President Trump to the head of the Joint Chiefs to the Secretary of War. I would say that I would trust my child's life in their hands.
What? Guys, you tell me. And then, bro, U.S. forces enter Iran. 65%. So he's in the middle of an interview, Sky News. He comes back, his voice is trembling. And the first thing he says is he has a teenage son considering military action and he would trust his life in the hands of Pete Hegseth. Unprompted. It's like, wait, what? What? Wait, what did you just say? I mean, I'm not here to like speculate on physiognomy, but he looks like he's about to cry.
Is in great spirits. The Iranian mission is proceeding well ahead of schedule. And I have to tell you, Wolf, that I've a teenager who's considering military service, and I could give this team my highest compliment from President Trump.
I mean, guys, I really am not an alarmist, but this is kind of a horrifying clip. And so then you pair this with this, with this, with this, and then you look at this, and then you look at this ceasefire down 36% on Polymarket. Then you look at this. Trump says the war will end when he feels it in his bones. You pair that with this. Trump says the Iran regime will fall, but maybe not immediately. And then you add this. The oil chart. And then you look at this. And you have to then ask, who's right? I don't know. I don't know. Okay? I don't know who's right. But I do know that there's something is off either direction. Either spy and risk is too cheap because we're about to taco and war's about to be done and we're sending, because when it's done, we're going to send. Or there's a significant escalation and loss of control in the Iran war with the United States of America, and most people are positioned offside for it. Hence why oil just legs and legs and legs and legs and legs. And maybe it's about to stop and maybe it's not. But oil is an obvious expression of this trade. And I think it's not crazy to say that the other best trade here is Bitcoin. And Bitcoin has become very attractive because, one, all the leverage was wiped out of the crypto market, just completely wiped. DATs were wiped. Everybody was just wiped out of the crypto market. Goes down 50, 60% and some change. There's no buyers left. Right when there's no buyers left and we're at our lowest, this like geopolitical, global war breaks out. They're doing, you can't get money out of bank accounts in the Middle East. You can't get money out of Dubai. I mean, it's almost like poetic timing. Not that anyone would want conflict, but Bitcoin is good in conflict. To be like, oh, wow, actually, this Bitcoin thing is fucking important. Like right now, people are like, usually when you realize Bitcoin's important, it's too late. It's important right now. And the longer this thing goes on, the more important Bitcoin gets. And at the exact moment, Michael Saylor whipped up some fucking financial alchemy that I'm not even sure I fully understand, and has figured out how to get access to billions of dollars of BTC a day again. And he is fucking twopping and twopping and twopping. And the thesis on Bitcoin as another expression of this trade has become very interesting. So I have a guy coming on right now. That was a beautiful transition, by the way. I shouldn't break the wall and acknowledge it, but that was incredible. I have a guy coming on right now, Jeff Walton, who runs this podcast, the MSTR True North. He's a huge Sailor Bowl. And I want to just talk to him because this stretch product is, bro, he's buying 400 million a day. The stretch product is definitely a game changer, at least local. Everyone's talking about it. I haven't discussed it once because I don't really know that much about it. So other than Sailor, let's go get the biggest guy we can on the pod and let's talk to him. So I got about 30 minutes. I'm going to bring him on right now. We're going to talk about this Stretch product. He runs a treasury company. I'm not interested in the treasury company. I'm talking about Stretch. And we're going to talk to him. And then when he gets off, we could watch some fucking the best in interview if you want. But this product is important. It's an important product. It matters. Sailor's buying $400 fucking million like a day. He bought 400 mil of Bitcoin the other day. It's getting gross. So I think 350 and some change, a couple B's a week. It's new Sailor. So I'm going to get off real quick. When I come back, I'm going to bring Jeff on. We're going to talk to him. But then when he comes off, we'll fucking round shit up and get ready for the weekend. All right, BRB.
I don't know nobody.
Hey. I'm a cool ass nigga, but my bitch bad. Whiplash, driving 95, I had to zigzag. If you ain't fucking, then it's cool, it's a mismatch. Switch that, 250 bitches at the kickback. Big chain on my neck, I feel like riff-raff. Smash a pedal on the hoe, I make her sit back. You want a nigga with some cash or a six-pack? I'm eating good, where the fuck you think I live at? It sound like YCMB, I make her bed ride. We in WrestleMania, she in the headlight. Twin glocks, 2 shots, feeling like I'm Tupac. Slam a nigga like I'm YSL, you niggas been pop, big rocks. I'm a big shot. I'm in the corner with a Drake, sitting pink drop, 2 golf hoes in my face, trying to live block, being clocked in.
The biggest risk to the United States economy was never the AI bubble. It was never China, and it was never.
Oh man! Oh man! Oh man! Oh man! Oh man! We can actually watch this after. It's actually a really good video. All right, let's do this real quick. Let's just tweet. That was really funny. Live with that punter, Jeff, talking about SCRC right now. Twitch.tv/threadguy. Hey, what does this mean? I just read this. I bookmarked it because I was going to read it off stream. What does this mean? Is this a shot or no? Shut up, medic power. All right, let's go. Let's lock in. Chat, we're learning about the world, man. It's fun. It's a little scary, but we are learning about the world in real time. Slot post about Zoomers not knowing much. Yeah, well, you go to high school and they don't, you know what? They don't teach you nothing. So, all right, let's get it. Jeff is coming on right now. You were the one liking on the tweet, yeah. Love you too, Rectal. Jeff's coming on right now. Let's learn about Stretch. It's important. I think we're going to spend a lot of time talking about this in the future. And Sailor's got the printer. All right, let's get it. Damn, nice one, Jack. Or Luke. Did they teach you about crude in school? No. I mean, they might have. I didn't pay that much attention in school. All right, let's go. One second here, Jeff. Let me get you up. Give me 1 second. And boom! Mr. Jeff, what's up, man? Wait, let me fix my audio for you. Okay, go ahead. Talk real quick. All right, cool. We're good. What's up, man? Welcome to the stream. How are you, dude?
I'm doing well. How are you?
I'm good, man. It's an absolute pleasure. I appreciate you coming on last minute. Look, things are getting exciting. We actually haven't been talking about Bitcoin that much the last couple of weeks. We got distracted a little bit with everything that's happening. Become a geopolitical stream for a couple of weeks here. But what's happening in the Bitcoin world is electric right now. This Stretch product is everywhere. Sailor's back on my timeline. And I'm like, it's time to really dive into it. So why don't you give us a quick intro, who you are, sort of a little bit of your background real quick in the Bitcoin world, and we can go from there.
Absolutely. So, hello, everybody. My name is Jeff Walton, Chief Risk Officer at Strive Asset Management. We are a Bitcoin treasury company. We have a publicly traded security, and we have a perpetual preferred security, SATA, S-A-T-A. So very similar structure to Strategy. We're following the Strategy playbook. We've been doing this. We went live as a publicly traded company in September, and we've been hitting the ground running. We've acquired a company. We acquired Similar Scientific. We did that a little bit earlier this year, and we are the 11th largest publicly traded holder of Bitcoin at the moment, and moving fast. So that's super exciting. And yeah, you're right. This electric space, everything has just been incredible over the last couple of months, watching the advancements of this ecosystem. A little bit about me, my background. I've been working in risk my whole life, really, my whole professional career. Prior to joining Strive, I was a reinsurance broker. So I sold insurance to insurance companies for 11 years.
Huh.
So reinsurance protects insurance companies' balance sheets, right? So insurance companies.
Insuranceception right there, yeah.
Yeah, it's just, boom.
Yeah, okay. I didn't know that was a thing.
Multi-layered. Yeah, so the insurance companies, when they collect premiums from policyholders, they invest those assets, right? So they invest those into different bonds and equities and things. So when the liabilities come due, they collect the float, like the additional yield earned from all the instruments that they held. They're able to collect that difference before the liabilities come due. And so it's just a very interesting business model. Berkshire Hathaway, Warren Buffett has been very interested in insurance his entire career. It's one of the reasons Berkshire is so big because they've invested in insurance and reinsurance. So fascinating business model. And the reason reinsurance exists is because if you have a portfolio of assets that are illiquid, like bonds, if you have a hurricane that comes through like Florida and wipes out a bunch of policyholders at the same time, worst case scenario is you have to go liquidate all of your illiquid assets at a discount to go pay out the claims. So the reason that reinsurance exists is to reduce volatility on an insurance company's balance sheet. So a lot of correlation to what we're going to talk about through here is like reduced volatility of volatile instruments.
I'll tell you what, they need you to take that insurance talent over to the Strait of Hormuz right about now.
It's a bit crazier.
Yeah, that's sick back. I didn't even know that was a thing, honestly. Is there like is there an insurer to insure the insurers?
Yes, there's a third layer. Yeah, there's a third layer. It's called retro reinsurance. Very few. There's very few of those players. They're very large. They've got a ton of large capital. So it is Berkshire Hathaway does a lot of retro reinsurance. So it's a global diversified web of capital that's protecting like the insurance industry globally.
That is insane. Thank you for the background. Maybe we'll circle back to it at some point. So look, when treasury companies were really hot, like peak David Bailey era, we spent a lot of time on them. Obviously, they've kind of unwinded for the most part here. I think they were out of the discussion a little bit. People were pretty fed up with Saylor, at least sentiment-wise, over the strategy thing post 1010. Bitcoin unwinds, goes down to 60K, whatever. And then he introduces the stretch product, and kind of bam, all of a sudden the strategy printer is going crazy, and things are accelerating in this scene. Can you give us a breakdown? Because I'm gonna be honest, I don't really know that much about it, how it works exactly. Can you give us a breakdown on the stretch product and how it works, and then we can get into some of the details?
Yeah, let's give a little bit of history and a background, because I think this is helpful context. So, strategy became very popular in 2021, 2022, 2023. They were taking on debt via convertible bonds. They were taking in capital in the door with very low interest rate, right? It was like 0% interest rate. And those bonds were convertible into equity at a certain point in time. And so they were able to get leverage on the Bitcoin that they held on their balance sheet effectively. But that leverage has covenants, and that money comes due at a future point in time.
Yeah.
So if the price of the underlying equity in the stock doesn't go up, then you have to repay the debt.
Yep.
Right. Okay. So this is just a debt instrument. That debt market is relatively like small, moderate size. Okay. And they're traded very illiquid. So there's think of like back alley in New York and London of all of the like really smart high-end capital guys just trading pieces of paper. There's like 30 or 40 people that trade these pieces of paper back and forth. So it's like very illiquid, and retail doesn't have access to them.
Got it.
even though they're very interesting products. But they have covenants, right? Like a lot of these smaller treasury companies took on convertible debt, and the convertible debt has covenants, right? You've got to post margin. The price of Bitcoin falls more than 50%, you could get liquidated. All of these types of things. So they were looking for the ideal form of debt to match to the asset itself. Right? So what do we know about Bitcoin? Incredibly volatile, right? It goes up, it goes down. It's incredibly volatile. So these covenants are pretty risky for like your corporate balance sheet. There could be a point in time where you have to liquidate your Bitcoin when you don't want to. You're like, I know this is
Forced
still going
seller,
up. You don't want to be a forced seller.
Exactly.
So enter the perpetual preferred equity product. Okay, so at the beginning of 2025, they launched their first perpetual preferred equity, which was Strike, STRK. Okay, so now what they were able to do is take the same structure of the convertible bond and put it into an equity that's publicly traded on the stock market with a ticker in front of it, so that everybody
Retail
can buy
trade
it.
it now.
Everybody can buy it.
Got
It's
it.
not just 144A. It's high frequency traders. It's retail. It's institutions. It's in a more interesting wrapper. That is more liquid. Okay, that's fascinating, right? Like, what can you do with a more liquid like debt instrument? So they're learning.
And has
as
this
they're
been
going
done
along.
before? Has any other company done something similar?
So let's talk about perpetual preferred equity. How perpetual preferred equity works. Okay, it's an equity instrument. This is junior to all debt.
Got it.
So we're talking about capital structure here, right? You've got capital structure works. You've got debt. You've got preferred equity, and then you've got equity. In terms of seniority, right? So this is junior to debt, but senior to equity.
Okay.
So it sits a little bit higher above the equity. So what's the importance of capital structure? In the event that a company goes bankrupt, your seniority in your capital structure impacts how much impacts your position on the claim of the assets that the company holds.
Like where you get paid out, basically.
Where you get paid out. Basically, equities last. If there's any money left at the very end, like it goes to the equity holders. But the debt holders get paid first. Preferred equity gets paid second. Equity gets paid last. So what they've done is effectively monetize the risk tranches within their corporate capital structure. Okay. It's a bit complicated.
I'm following.
We don't need to
100%.
We don't need to get that far into it. But this preferred equity market has been around for a long time. Okay. So when somebody is issuing preferred equity, historically, an issuance of preferred equity was a market of last resort, right? Like if you were a company and you're kind of failing, you've already tapped out the debt capital markets, you would go issue perpetual preferred equity to go raise some capital. And with knowing that you never have to pay the capital back because it's equity, there's no debt maturity. Like you don't have to pay it back into the future. But there may be yield covenants associated with it. Like I'm going to pay out a yield stream for a future point in time. It could be perpetual. It could be a term, etc. So this market has actually been around for a really long time. Now, the unlock here is bringing this capital to this structure, right? So it's issuing a perpetual preferred equity instrument backed by Bitcoin that retail could be interested in holding with high yield and traded with a ticker in front of it. Okay, so let me try to put this into perspective a little bit more. The rest of the preferred market, like JP Morgan issues preferred equity, Wells Fargo issues preferred equity, Bank of America issues preferred equity. Their preferred equities pay about 6.5% interest. Okay. Strategies pays 11.5%.
11.5%. Yeah.
Ours, we have one. It pays 12.75%.
Whoa.
Okay. And it's backed by a huge balance sheet of Bitcoin.
Yeah.
Whereas the perpetual preferred equities by the banks is backed by their bank assets.
And so,
makes sense?
Yeah, it makes perfect sense. How is Strategy able to give 11% yield and JP Morgan's giving 6%? You guys are able to give 12%. Where's the yield coming from on Strategy?
So it's the productivity of the underlying asset. Long-term underwriters of Bitcoin.
Mhm.
Okay. I'm directionally long Bitcoin. Our company is directionally long Bitcoin, and we are doing the work of underwriting what the future of Bitcoin looks like. Okay. So we are underwriting it to, a 25 to 45% CAGR over the next 10 to 20 years.
Okay.
Compound annual growth rate. Okay. So, but we recognize that there's going to be a lot of volatility in between. So we say, we'll do the hard work. We will take on the volatility on our company's balance sheet. We will deliver this yield on this instrument that we're providing to the market. Okay, so we're responsible of figuring out how to pay that yield.
Got it. And
Okay,
so,
makes sense.
okay, keep going, keep going.
So like for our company, for example, we have 18 months of cash and investment coverage over our dividends.
Mhm.
12 months of that is held in cash. 6 months of that is held in STRC. So that's our first buffer.
Okay.
Right. So we could pay.
Some
we
of it's
could
held in
pay it-
STRC. Okay.
Yes. So we
Okay.
could pay out our dividends. We could pay out our dividends for 18 months if we did nothing.
Yep.
Just in cash and our STRC holdings.
Uh-huh.
Okay. And then behind that, we have 17 years worth of Bitcoin coverage.
At what price?
Today's price.
At today's price.
Yeah.
Okay.
So if you're interested in holding an instrument that's going to pay you a 12.75% yield, or for strategy, 11.5% yield, you'd look at what is the risk that they don't pay the dividends.
And so
Right.
if like say you were forced to use like you made no more cash, you were forced to use 17 years of Bitcoin at 71K and some change to pay out your dividends, how would you'd essentially just like evaporate the company? Like how would you make money through that?
So the really fascinating thing about this business model is I think it's very compelling and very interesting, even if you had no other access to capital. Like, so for example, are you long Bitcoin? Do you like
Yeah,
Bitcoin?
like
Bitcoin.
ridiculously long. All spot,
Okay,
but yeah.
So let me just pose an example to you to
Okay.
think about. Okay, if I gave you one Bitcoin today, okay, for free, if I gave you one Bitcoin today, would you be willing to pay me $8,000 a year for the rest of your life?
If you gave me one Bitcoin today for free, would I be willing? Yeah, potentially. Yeah, like generally,
it-
yeah, probably. For the rest of my life, it's
Right?
crazy though.
Yeah.
But I'm pretty like ridiculously long Bitcoin. No, I'm not sure that I would. I need to like think about it for a second. No,
Right.
no, I wouldn't.
Why not?
Well, because if
Let's just say
Bitcoin goes
let's just say
flat or goes down significantly, like if Bitcoin goes like if in 2 years we're trading at like 40K BTC, I'm in a ridiculous spot. I'm in a tough spot, right? If I pay you 8K today for 70, I pay you another 8. We're at 24K. Bitcoin's at 40. The spread gets weird.
Let's say you had 4 Bitcoin already, and I gave you 1 Bitcoin, and all you had to do is pay me $8,000 a year for the rest of your life. Would you do it? You have 5 Bitcoin total.
Yeah, true, but I paid for 4 of them.
Yeah, right. But like, what's the benefit of getting that additional Bitcoin today?
Oh, you're just getting more size, right? Like more leverage, basically.
Yeah, it's a little bit of leverage, right? So backed by a balance sheet. So you could start to think of it that way. It's a very interesting analysis.
I mean,
I've done the
think
math.
Probably yes, because I kind of have like moon boy Bitcoin targets. Like I think probably yes, but like realistically, it's a tough equation. Like is that your math? Is that how the math works?
I'm the chief risk officer. I've run thousands of Excel sheets in the background and using code and understanding this.
Yeah.
It's a very fascinating equation when you back test it.
Okay.
Like you can back test it. You could go look at this. If I did this at the beginning of the month, every single month in history, even if I did this at the very bottom, like in the bear market of the worst period of time, like does this model work? And if I had to sell Bitcoin, like, am I better off today doing that than if I wouldn't have done it?
Like, are you better off paying
So
8,000 basically?
let's think about it. So
Okay.
8,000 times 8 times 4, 32.
Yep.
So you'd pay me $32,000 over 4 years.
Uh-huh.
You'd pay me $64,000 over 8 years.
Yep.
One Bitcoin today is worth 70 grand.
Yep.
Like, do you think, right? Like, what we're doing is we're carving off the excess volatility and the excess return.
Yep.
Okay. Because it has a senior position on my balance sheet, it's less risky than our equity.
Yes.
Okay. So we're carving off the excess risk and the excess return. And that excess risk and that excess return is going to our common stock.
Can I ask you a question on this?
Yeah.
If I buy this product and lock in 12% yield annually, aren't I sacrificing the reason I'm holding Bitcoin in the first place, which is like extreme outsized return? Like if I gave you money and bought your product, say I bought $70,000 worth of, what's it called?
Zeta or Stretch. Yeah.
Cool. Let's use Stretch. If I took $71,000 and I bought Stretch instead of Bitcoin, and then Bitcoin does like a 3x over the next year, I'm only returning 7K. I'm returning like 11%, 7K and some change. I missed the whole upside. And so from that perspective, why wouldn't I just go buy JP Morgan's product and then buy spot BTC, still get half of the yield, like you mentioned, and that like they're a convertible product, but then you get the upside for the reason you're buying Bitcoin in the first place?
I think you're missing the concept of capital allocation globally. Like, what's the point? Like, what's the point of capital allocation, right? Like, you're skewed, right? Because
Okay, explain that. Capital allocation globally.
Yeah, you're skewed because you're like long crypto, long Bitcoin.
Okay.
Right. Okay. But what's the reality of how capital works globally? Right. So if people have cash or capital, like they're holding it for different reasons, for different things.
Uh-huh.
And they need to use it at different points in time.
Uh-huh.
Right. Like, younger people with a longer time horizon and probably like low expenses are probably willing to take on Bitcoin volatility, and they might be willing to go 100% long Bitcoin.
Yeah.
Right. Yeah. But okay, what if, your dad or your grandpa that's like 80 years old wants some exposure to this stuff to help them in retirement, but they can't be 100% long Bitcoin and take a 50% drop to the forehead.
Yep.
Right.
Yep.
They're gonna be like torn apart. Like, they can't. So it comes, the question then becomes like, where does all the capital lie? Who has all the capital? And these instruments are providing a different exposure for those different capital pools that will never buy Bitcoin.
I see.
Right? Like, so you're asking me like,
so you basically are able to get more yield than you would from a traditional product, but then you don't carry the risk of a 50% haircut on BTC.
That's correct.
So who's the marginal buyer of this product? It's like a.
So let me put this into perspective as well. And it's two things.
Okay.
It's not just the yield, but it's also the liquidity. The liquidity is incredibly important.
Got it. Fair.
Okay. So these instruments are incredibly liquid. So for example, just today, Stretch traded 2.2. What is this? Stretch traded $260 million today.
Okay.
The JP Morgan preferred instrument traded 2.
Yeah, believe it. Okay.
2 million.
That's like a pump fund shitter.
Yes, this is 100x more liquid than JP Morgan preferred stocks.
Okay.
Wells Fargo preferred stocks. Like, these are some of the largest banks on the planet.
Yep.
Right? They're offering 6% yield and illiquid. This is offering 11.5% yield and it's liquid.
Uh-huh.
Okay, that's fascinating, right? Like, that changes
100%. 100%.
That changes how businesses manage capital. Now, who's buying this? Who would be interested in this in the long run? So the global like fixed income market is probably between 200 and 300 trillion dollars.
Jesus.
Okay.
Okay.
Massive.
Yep.
Gold is what? 36 trillion.
40, yeah.
Okay, so think 10x larger than gold.
Yes.
Okay. And how much fixed income is out there, and like who has it, and what are these things in? Okay. And how liquid are they? these products are targeting that entire market.
Okay.
Again, that entire market is people that would never buy Bitcoin ever. Like they literally can't. It's
Yeah,
just a
yeah.
mandate. Like I can't buy Bitcoin. I can't even buy IBIT. So you think about
Why can't they buy
for me,
IBIT? Because they won't or they can't?
they just won't.
They just
They
won't.
just won't.
Okay.
Well, there's a few things, right? So typically, asset managers. So CEO of our company is Matt Cole.
Okay.
Matt Cole spent 11 or 12 years at CalPERS. CalPERS is the California pension fund,
Mhm.
largest pension fund on the planet.
Mhm.
Okay, he managed a $70 billion bond portfolio. He wasn't able to touch a fund until it was 3 years old.
Why is that?
It was just a mandate.
Okay. Jesus.
Funds have mandates like this everywhere. Okay, IBIT is 2 years old.
Yeah. Yeah. Yeah.
So there are people that won't even touch IBIT until it becomes 3 years old.
Okay.
Like they have a filter,
Oh, like
right?
you, like
they
you
go into-
legally can't even buy this shit until it's okay.
not
I-
legally, but
but
they
like
have mandates.
company
internally that-
mandate. Yeah. Yeah. Like
they're just-
legally in quotes. Yeah. Yeah. I got you.
Yeah, sure. They're just not going to buy it. They have a filter on their screener, and it says like,
Yeah. Can't touch
got to
it.
be greater
Yep.
greater than 3 years old, whatever. Okay, so you've got that as one component.
Okay.
So those people, they never buy IBIT. The other thing that's happening right now, just for perspective, like insurance companies, there's trillions of dollars of capital that sits on insurance company balance sheets. Okay, they hold cash, they hold bonds, they hold equities, they hold all these other things. So they can't buy IBIT, they can't buy Bitcoin because they have regulatory constraints and rating agency constraints that do not allow. They don't get to take credit for it on the balance sheet.
Okay. But they can buy Stretch.
They can buy Stretch.
So what? How much what is the pool of capital roughly that had previously no access to buy direct Bitcoin exposure, IBIT, ETFs, all of it, that can buy Stretch?
It's probably hundreds of trillions of dollars. Like a couple hundred trillion.
It's like multiple 100x is the Bitcoin market cap, basically 100x the Bitcoin market cap.
Yes.
Interesting. Okay. And
so like the scale here is enormous.
Yeah,
like,
yeah.
Astronomically enormous. Like this could scale
because
drastically.
basically, like in like retard terms, all of these funds that are basically physically, legally, internal company mandate, whatever, unable to buy Bitcoin because of risk, because of age, because of whatever reason, is able to safely put Stretch on a balance sheet.
Yeah, they could start to consider it.
Yeah, got it.
And so the other thing is, right, Stretch isn't even a year old. Stretch is 8 months old.
Yeah.
Think about where Stretch will be and where our instrument will be 3 years from now.
Yeah.
Like, so there's this hockey stick pattern that typically works for ETFs.
Yep.
So our company is an asset manager. We have like 12 to 13 ETFs as well.
Okay.
And there's a typical trend when you look at ETFs and how assets under management works. Typically at the 3-year mark, there's a hockey stick J pattern.
Okay.
So
why?
What
was significant about 3 years? Just because you hit that maturity.
That mandate.
Okay.
Mandate of track record. Like
I didn't know about this. Okay.
Track record in like large capital is incredibly important.
Got it.
Like they're not going to go buy, X shitcoin on whatever platform, right? They're just not going to do it. Like you need to have a track record of this stuff and a track record of paying dividends, right? Like there's been a big question, how's Strategy going to pay the dividends? Well, they've got cash on their balance sheet and they've got $50 billion of liquid Bitcoin sitting behind it as well.
Yeah. But they can't, the Bitcoin number is sort of a farce because they can't, I mean, they could, but they can't really tap into that.
They could theoretically, they probably won't have to.
But the whole thing implodes if they have to, right? I mean,
I don't think so.
Not about implodes, but that candle is gnarly if that happens, right?
Yeah, possibly. But I don't. They could also pause the dividends on the preferred stocks.
But if they do that, then there's this like massive sell deleveraging, right?
If there's deleveraging on what?
On the preferred.
Strategy doesn't have to sell. If the
like,
price
but
of the preferred
if they
goes
pause the dividends, then why is anybody carrying that risk of
They could pause the dividends, but you're right.
They can't really do it, right?
It accumulates. So if they pause the dividend that they would have had to pay does accumulate. So there is that component. 2, if the price of the instrument fell drastically, they could theoretically buy it back as well.
But so like if they had to pause the dividend, everybody panic in theory, right? They pause the dividend, everybody panic sells, that they have to offer higher yield. And like it just gets and they're less likely to pay it and it gets crazier and crazier.
Yeah, it's I think a very low probability scenario.
Okay.
Like these companies that are created and designed to be high credit quality. And so there's so many things that you would do before you would do that, right? Like you would look at derivatives options on the underlying Bitcoin. You'd look at yield strategies. You'd look at debt. You'd look at different financing scenarios. A lot of people like to instantly go to that, doomsday scenario, but I think it's misfounded, and the reason is the relative risk of that happening is way worse, or like way less likely than seeing massive explosions in the existing credit market.
Okay.
I'm talking private credit. I'm talking, any of the bond market, any of the existing preferred market, like that. I think people are, especially if they're focused in the space, they're not necessarily thinking about that risk event relative to other risk events in the rest of the credit market.
Okay.
That makes sense.
So like private credit's just going to implode too, but this is like less likely.
I think personally, I believe this is a scenario that you were trying to go down there is far less likely than a significant event in any of these other credit markets.
Cool.
Yeah.
So then I guess like a follow-up, I'm not even trying to go I'm honestly just trying to understand. So I'm not even trying to go doomsday.
Yeah.
I'm just laying this picture out. Is like, what percent returns does Bitcoin have to generate for Stretch to be able to maintain 11% and some change yield? I know they have a bunch of cash on the balance sheet.
It's like 1.8%.
1.8%.
Bitcoin needs to go up 1.8% a year, and they can pay the dividend forever.
Interesting. And at what point would the yield disappear? But then your answer is sort of like they have the cash, they have the Bitcoin, and then they can go deeper in their bag.
The money
right?
supply increases at 6.7% annually.
The money supply increases at 6.7% annually. Explain that.
So the U.S. M2 money supply.
Oh.
Dollars.
Okay.
Dollars.
Damn, is that true? 6.8% is high.
Since 1970. For the last 50 years.
Jeez, that's
56
disgusting.
years.
That's gross.
It's gone up 6.7% CAGR.
That's gross.
Annually. So you look at the relativity, you're like, okay, Bitcoin needs to go up
1.5
you're
to,
like,
yeah.
Okay, well, just the money supply increase is like 4x's.
Yeah.
Like that required CAGR. The other thing that's fascinating, and this is what I think many people don't really understand, is the preferred equity is the product.
Okay.
Right? And the common equity is also the product. What do I mean by that? So you have Bitcoin, right? Which is the asset that everybody knows. And then you have the common equity and the preferred equity. So the preferred equity is low volatility Bitcoin. So that excess risk and that excess return gets delivered to the common equity. The common equity is like high volatility Bitcoin. You can think of it as amplified Bitcoin.
Yeah, okay.
So these are two different expressions of Bitcoin. Okay, you kind of think of it like that.
Yep.
Now, what's really interesting about Bitcoin? It trades 24/7, 365, and it moves.
Yeah. Volatile as fuck. Yeah.
So if you're a trader, these instruments start to become very fascinating.
Yes. Yeah.
I want amplification. I want to turn it up. I want volatility. I want to hedge my portfolio with the most liquid instrument. And so that results in people that are longing it. That results in people that are shorting it. That results in people that are trading it.
You're just getting movement. You need movement. Yeah.
So that creates more movement. Now, what does that movement do? That movement creates liquidity pools.
Yep.
So Strategy, funny enough, is they're like around ranked the 250th largest company, U.S. company by market cap. Okay.
200.
They're like,
okay.
Yeah, but they're like the 15th by volume.
Shares traded, yeah.
By volume. Okay. That's fascinating. That's what allows this ability to pay these dividends into the future, because that trading back and forth means that stock is moving. They're able to sell equity within that trading.
Okay.
So you think about the relativity here, right? I think Strategy needs to raise $800 million a year to pay their dividends.
Okay.
They raised like 700 million on the common stock last week.
Yeah, that's fair. Yeah.
Last week.
Yeah. Okay.
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 So like the relativity is just you put it into perspective. You're like, okay, there's 252 trading days in the year. Like the probability that they raise $800 million to that they can raise $800 million to pay the dividends, it's there, right? Like that volatility on the common stock is not going to go away either.
Yep. What's some moon math on if volume stays generally at this level, how much Bitcoin Sailor will be able to buy?
Oh, that's moon math, right? I mean, there's websites that are doing this now, but I think this week they're probably going to pull in, I don't know, 30,000 Bitcoin. I would think maybe even higher. And it's a bit crazy, but you think so. The most interesting part here is everybody used to give strategy shit for buying the top, right? Like, oh, this only works in a bull market.
Yeah.
Well, here we are, 45% off the highs, right?
It's still
and
working, yeah.
They're leaning in. They're growing. They're picking up steam. This instrument is like all you can see on Twitter today. Like
This is the fair
week, right?
take.
Like,
yeah, irrefutable.
So the plumbing has changed.
Yeah.
I don't think people quite recognize that. Like the plumbing of Bitcoin, the plumbing has changed, right? This hasn't existed in bear markets in the past. Like an instrument that was attracting new capital that was never interested in Bitcoin to the ecosystem to buy Bitcoin. And every dollar that they raise on STRC, they're buying Bitcoin.
Yeah.
And that's new capital. That's a continuous bid.
Yeah.
And the other reason this works, and I pointed it out a little bit earlier, like historically, if you're a capital allocator and you had a medium term liability, right? Like if you knew that you needed to buy a car a year from now,
okay,
and you had like 40 grand, but you're like, I want to buy a car a year from now because I'm gonna like move or something.
Yeah.
Where would you park the money?
I mean, probably put it
Or a down payment. Let's think of it like a down payment, right? Like let's just say you had $100,000 down payment on a house, and you're like, I'm going to buy a house, but I think it could be next month, but it could be 6 months from now, it could be 8 months from now.
Yeah, I mean, I'm probably keeping it in dollars on some super low risk.
You'd probably keep it in dollars.
Yeah,
right.
Put in stretch now.
So
fuck it.
What's the risk profile? Would you rather earn 4% or would you rather earn 11.5%? What's the down? Like, are you going to be able to get your $100,000 out? Dude, it traded $250 million today. Like your $100,000 trade would just get lost in the sea of trades.
Yeah.
Right. So you think about liquidity, you think about risk profile. Like, okay, are they going to pay the dividend this month? Are they going to pay the dividend the next 12 months? They have 24 months of dividend covered in cash today.
Yeah. So do you have your mortgage in this or no?
I'd prefer not to share my background, but like our company just bought $50 million of this.
Jeez. Okay.
Let's put it that way. Our company has our latest SEC filing just came out. I think it's around $140 million in cash. We just put $50 million of our cash into.
Why did you put the rest?
Huh?
Why didn't you put the rest of the cash?
So we also have a perpetual preferred equity instrument, right? Okay, so we've got to think about our liability management, and we think about duration capital, right? Like you can think about capital management in terms of duration, right? Your shortest term liabilities, you need like super liquid. As you go further out, you can go a little bit further out on the risk profile to take a little bit more yield, harvest more yield.
Yeah.
So you think about the relative risk profile and your credit quality. Like, how do you communicate to the market? Like, how do we communicate to credit investors that we continue to be credit worthy and how we're managing risk on our balance sheet?
So are you paying your product's yield with stretch yield?
I mean, we have cash on our balance sheet. We're like that. We will receive dividends from STRC. We will have the ability to do things with those dividends on STRC, and we are going to manage the balance sheet to pay our dividends into perpetuity.
Okay, but that's how you're able to offer higher than stretch, right? It's like you have some cash, some Bitcoin, and then your cash goes into their product.
Well,
and then
theoretically, right? Like, why are we offering a higher yield than stretch? theoretically, our balance sheet is slightly more risky than strategies. Like mathematically, if you're thinking about asset-backed lending, like that number that strategy needs Bitcoin to go up 1.8% compounded annually in order to pay the dividends forever. That number for us is around 5.8.
Okay.
Okay. So again, we are underwriting the long-term perspective of Bitcoin. And so our instrument would be, has a different risk profile than strategy stretch instrument.
Okay. Is it low enough? Like, is the 12% and some change far enough off of 11% and some change to justify like essentially looping the stretch product on the risk profile?
It's fascinating that you bring this up. So our instrument is 125 basis points higher than strategy's instrument.
Okay.
Right, 12.75 relative to 11.5. And it's funny that people make that comparison, but I think what a more compelling comparison would be is our risk profile relative to the JP Morgan perpetual preferred.
Fair, but obviously we're gonna look at stretch versus like stretch 2, like because the JP we've already like accepted okay, fuck the JP Morgan thing. We're on like Bitcoin yield here, so like it's gonna be compared to stretch, right?
Yeah. So the difficult
that's who
part
you're competing with.
I would say they're complementary.
Okay.
But I guess you could say we're competing with them, but I think they're very complementary products, and I think they're very complementary when you're thinking about capital allocation for duration.
Fair.
So, when you look at the mathematical risk profile, which is fascinating, we've got a lot of analytics, and we're going to try to publish some here soon. I think the relative relative risk profile between STRC and our instrument SATA could be debated to be much lower than 125 pips.
Okay.
So I think like without
fair.
my lawyer's jumping down my throat.
I'm just trying to get this.
It's interesting. There's math behind it, right? Like, so you can go and run like Monte Carlo simulations and run math. I think one fascinating difference.
Okay.
To give you perspective.
Yeah.
Strategy, they have $50 billion worth of Bitcoin, and they have $8 billion worth of debt.
Okay.
Okay, and then they have about $9 billion worth of preferred equity.
Okay.
Okay. I think you could think of that as like a total amplification around 30%.
Okay.
But their debt leverage is around 12%.
Okay.
Our company, we have around, I don't know, $950 million of Bitcoin.
Okay.
Okay. We have $10 million of debt. So we have a 1% leverage ratio. Strategy has a 12% leverage ratio.
Okay.
Okay.
Yeah.
So that like we have the capital structure that strategy wants to have by the year 2029. We have it today because a majority of our, amplification comes from perpetual preferred equity. Like that capital that we brought in on the perpetual preferred equity, we have no debt maturity.
Got it.
Like we never have to pay back the principal. Like, there's no call. Like if you hold the instrument, you can't call it from us, right? Like you can't call your principal back. You have to go trade it in the open market.
Got it. Okay. Thank you for the explanation. I was curious. I guess my last question for you sort of wrap it here, is can you just explain, like, okay, if Stretch does like $100 million of Stretch is purchased today, how does that capital get allocated? How does it actually work?
I guess what do you mean?
Like, they just take all of it, just all of it, and they just market by Bitcoin, like 100% of it?
They can go buy Bitcoin with it, and they go buy Bitcoin with it quick. So you think about volume. So a lot of people have been really focused on trading volume of STRC. So what they're able to sell. So Saylor has come out. They are not going to sell Stretch under $100.
Yep.
So the price needs to be above 100, and they will actively sell shares into the market.
Yep.
And so everybody has been very focused on how much volume trades above 100, because some percentage of that is going to capital that's coming in the door. You could think of it as like they're selling their product every day. It's just a function of the printer, right? Like the how much volume is trading on the
Yep.
instrument. And so I think historically it's been around 50% of volume above 100 million or above a price of 100 is what's taken and purchase Bitcoin with it. So you think about it, it's actually capital that's coming in the door to Strategy. That capital that comes in the door is cash, right? It's fungible. You could do multiple things with it. Likely a majority of it's going to buy Bitcoin.
Cool.
Well, another thing that's been fascinating is that at the same time that they've been issuing Stretch, they've also been issuing MSTR at the same time at about a 2-to-1 rate. So if they brought in $500 million of Stretch, they probably issued $1 billion of MSTR.
Yeah. Okay.
Okay, so they raised about 1.5 billion in that circumstance. And the reason they're doing that is they're maintaining the credit profile.
Got it.
Right? So that credit profile stays constant. So the next week when they announce their buys, they'll say, I don't know, we bought 1.5 billion of Bitcoin this week. And yet the next week they raised all this money and they've successfully raised all this money on the perpetual preferred equity instrument, but the risk profile stayed the same.
Got it. Okay.
So the credit investor then is not concerned about the credit quality of the instrument, right? Like they want to buy more.
So then what happens to MSTR? Because you have the people with the risk profile willing to just buy Bitcoin, buy IBIT. And then the people that aren't willing, we open up this new market, they buy Stretch. Does MSTR just get destroyed?
I don't think so, because the value of the common is a function of the underlying Bitcoin, and in my opinion, I think it's completely mispriced at the moment. You look at its the capital model and the capital structure that they've created. In my opinion, this should be one of the top publicly traded equities in the market. Like
what is fair value for MSTR?
What do you mean?
Like what do you think what do you think it should be priced at?
More than it is right now.
Okay.
Significantly more than it is right now. So I think the market cap today is around, I don't know, $50 billion. Given the moat on the capital, given the fact that they have magnitudes more, what do they have? 120x more Bitcoin than the next closest publicly traded holder of Bitcoin.
Damn.
And right, it's just like, wait, 11, 12x, not 100x. They've got 12x more Bitcoin than the next closest publicly traded holder of Bitcoin. And that the structure, the instrument that they have in place relative to that, it can grow. Like I said, the total addressable market of that is 200 trillion, 300 trillion.
Yeah.
What's the total addressable market for iPhones?
Yeah.
Infinite. Well, it's like for iPhones, right? Like how many? There's 8 billion people on the planet.
Yeah.
8 billion times 1,000. If everybody on the planet had one,
yeah,
that'd be 8 billion or 8 trillion. Sorry.
Yeah. Okay.
So $8 trillion total addressable market for iPhones, 200, $300 trillion market, the total addressable market for this instrument. So, and I talked about this on my stream last week, so they've got about $4 billion of this outstanding currently. If it 10x'd, it would be 40 billion.
Okay.
Okay. So, and if it 100x'd, it would be 400 billion.
Mm-hmm.
And if it 1,000x'd, it'd be 4 trillion. And that would be about 1% of the total addressable market.
If it 1,000x.
Yeah. In size, in notional outstanding. It'd be about 1% of the total addressable market. Maybe 1.5.
Okay, so my actual sign-off question then is, what is your end of the year price target for Bitcoin?
Oh man, higher. It's higher. I think we're
like, is it like disgusting? Like, do you have like a sickening price target?
Oh man, yeah, probably. I probably shouldn't say it out loud. I think it's just materially higher because the plumbing has changed. We've got the Bitcoin ETF was the most successful ETF in history. Morgan Stanley just launched an ETF.
How many figures is your target? Like how many commas? 6?
It's 6 figures.
Okay,
yeah.
It's 6 figures.
It's 6 figures.
Okay.
But I like it.
Mine's higher than that.
There's a probability of outcomes that's so high, right?
Like, yeah. Okay.
It could move very aggressively. But it just kind of depends, right? Like what happens globally, like what happens politically, are there cracks in the credit system? Does the credit there is a world where there's cracks in a lot of the global financial system and it moves fast and there's another comma in that scenario. But like that's a pretty bad. I think that would be a bad scenario, like for a lot of people. Like that would probably mean a lot of people are in pain, and that the money supply is increasing like very rapidly. So like there's also, you got to think about the reality of being in a situation like that. Ideally, it wouldn't move that fast.
Yeah.
But it could. Plumbing's changed.
Yeah,
right?
I like
that's the whole thing.
that part. The plumbing's changed.
Yeah.
No, this was sick. I actually think you did a exquisite job breaking down some complex topics. Punter Jeff,
you.
hopefully we could run a part 2 at some point. Is there anything you want to sign off with?
No, I think we're going higher. I think this is all going higher. And this digital credit is going to change how companies rethink capital allocation. And there's no better place really to put your capital if you have short-term liabilities.
Sick. Jeff, I appreciate you, man. Thanks for coming on. Thanks for your time, brother.
Take it easy. We'll see ya.
Peace. All right. What do we think? Be honest. What do we think? I don't. Look. I think the stretch thing is cool. If you really have to just grow 1.5% annually and they can back that 11% yield, I think it's a cool product. That's a sick product. Also, I fuck with the access to new capital thesis. Is very cool. Now, stretch 2. He kind of just said we're looping stretch and giving like taking a little more risk. That one's a little bit like, hold on. Our radar started really going off at that point. I think he's sharp. He's sharp. And he did a good explanation. Yeah, the iPhone thing was funny. When we start getting in the looping of the looping, it's a little bit uncomfortable, I think is the word. I didn't really realize they were a treasury company. Let's see, what's the deal? I just like don't fully agree with the new access to capital, because it's like, okay, if you want safe percent on your yield or on your money, you're probably just buying JP Morgan's, right? That's not going to implode. You'll take the 6% over 11. And then if you want upside, you're just buying Bitcoin. So the 11%, like, does that just get lost in the middle? I don't really know. I need to the like convertible debt shit is like a little bit I don't want to say over my head, but a little bit just like I haven't spent a lot of time with it. Okay, it's like where we were with conflict in the Middle East like 4 days ago. So I need like 4 days. I need like 96 hours to really give you a take on that. But I do very much appreciate him coming on. He's a sharp guy for sure. And I like the plumbing has changed. Like they have access to capital that just like wasn't here before. There are a lot of access to capital. But to put your mortgage in it was crazy. That was crazy. Put your mortgage in it was crazy. I do want Calvin back in. What's the latest on the oil trade? Funny you asked. You had good questions. Thanks. I didn't write any down. I was kind of just raw dogging it. And I really didn't do any research before. Dude, yeah. I did my best to get the full picture. Is that conviction? It seems kind of scary. Why don't you diversify? Why don't you use 10 microphones? I mean, this is just, there is. All right. I mean, I have an oil rant before we do anything. I have a legit oil rant to give you. There is a spread. There is a spread happening right now. Yeah, that's why I like this stream. You think logical on what they say, then ask new questions. That makes sense. Thank you, brother. There is a spread between how the market is positioned and then realizing and understanding how out of hand things have gotten in the Middle East. I really believe it. And Polymarket's sort of catching up. I can't get over this. Troops enter Iran. Look at it, bro. 63% chance we get boots on the ground. It's fucking nuts. It's fucking nuts, bro. is actually nuts. How's the war looking today? Not well. It depends what side of the trade. Not great. All right. Here's the deal. I need to get up real quick. I'll be back in 30 seconds, and I got an oil rant. I got a long oil rant to give you. I'm just gonna.
The biggest risk to the United States economy was never the AI bubble. It was never China, and it was never the orange man in the Oval Office.
BRB!
I don't know nobody.
Hey. I'm a cool ass nigga, but my bitch bad. Whiplash, driving 95, I had to zigzag. If you ain't fucking, then it's cool, it's a mismatch. Switch that, 2 freaky bitches at the kickback. Big chain on my neck, I feel like riff-raff. Smash a pedal on the hoe, I make a sit back. You want a nigga with some cash or a six-pack? I'm eating good, where the fuck you think I live at? It sound like YCMB, I make her bed rock. We in WrestleMania, she in the headlight. Twin glass, 2 shots, feeling like I'm Tupac. Slamming nigga like on YSL, you niggas been pop, big rock. Jumping up and down on a big shot. I'm in the corner with a Drake, sitting pink drop. 2 golf hoes in my face, trying to lip lock. Big clock, getting on the same.
The biggest risk to the United States economy was never the AI bubble. It was never China, and it was never the orange man in the Oval Office. It's something much more boring, and it's something you've likely never heard about, unless you...
Why does it keep playing? I'm not playing it. It keeps playing after. I'm not playing it. It just keeps playing. I'm not playing it. It just keeps playing in the background. Please delete the song from the face of the earth. Why? Wavy A, do you know what that song is? My bitch back cool. When I hit. All right. Yeah. I mean, look, I gave the rant at the beginning of the stream. I'm not tapped in enough for that one. Really? I thought you would for sure just like, it's a snippet though, so that's fine. I thought you would just one shot that. I'm not gonna lie. You're usually my music guy. You don't know what that is. That's how I know I'm in my. That's how you know I'm in my bag. Bro, for sitting through that interview with the finance bro, I deserve the song name. Wouldn't you like the name? All right, let's see what we have. Thoughts on Clav Polymarket? Clav is the new supreme leader. Is there any updates on war? U.S. invokes Defense Production Act for Sable Offshore. I don't really know what that means. Oh, yeah. This was the other update we didn't talk about. This was the other update. My phone died, which is really annoying. This is the update we didn't talk about as well. Is this a Marine expenditure The Pentagon is sending a Marine amphibious ready group, and the and the 31st MEU to the Middle East with about 2,500 U.S. Marines. A defense official confirms to Fox News. The ship is based in Japan and could arrive in 1 to 2 weeks. I just can't sell my exposure. I can't. I just keep saying this because I think it's true that the trade right now is the delta or the spread between how everyone is positioned, as in we're going to taco, to how out of control things have gotten in the Middle East. And I think Polymarket is actually probably a better gauge for where this is at than the crude order books, because they're fucking with the crude order books. Besson is not in the Polymarket order book. I actually think Polymarket is a better gauge for how out of control things have gotten than markets right now, than liquid markets and than crude order books. Because Besson's in the fucking crude order books, fucking with them. And this take, I think, is the one you should think about over the weekend. You should think about this over the weekend. You really should. Really sit here and think about this. To be fair, brought oil up almost 2x. You should really think about this. People don't realize how bad things are because the Trump admin interfered with the very system designed to inform everybody how bad things are. Really think about this over the weekend. I just cannot get over how this was possible. How was the market so wrong for 48 hours on the oil trade? Well, maybe, just maybe, this PA was fake. Maybe, just maybe, this PA was fake. And it was Besant, and it was pure fuckery, doing everything they possibly could to keep this down. A Trump taco, a Chris Wright tweet that wiped out 30% of the market cap that was fake and deleted. How is it possible that for 48 hours, the market was so offsides on the escalations in the Middle East? How? How is that possible? I can't get over that. How is that possible? Well, they're fucking with the markets. That's how, of course. They're fucking with the markets. And I think this is a very important tweet as well, this D. Gills one. Sentiment doesn't equal positioning. Most people will never understand this. It's just like crypto after 1010. Everybody was screaming complacency, bearish, but everybody was fucking tits long Bitcoin and crypto. And so then price goes down and we get this great deleveraging. And so I thought about selling. And I still am thinking about it. I could get wiped pretty easily because I think the RR up here is pretty bad. I think the RR is still bad. At any moment, Besant's back in the order books. At any moment, Trump backs out, declares the war over. At any moment, maybe a ship gets through the strait. They're threatening to open it up to India. China's already getting through. It's sort of turning into a VIP line through the strait. There's no mines. That you could theorize that would be de-escalation a little bit. And then if worse comes to worse, they slap price controls on it and they cap it and you're fucked. And so there's a lot of reasons why the RR up here sucks. But I have just come to the conclusion after this, Besant trembling at the interview, after this, Pete Hegseth, they refuse to admit how many Americans have died in the war. 6 more Americans died on a friendly fire collision. After this, Trump, when he feels it in his bones. After this, they're sending Marines out there. After all of this, they still can't get the fucking strait open. And I think that the market SPY is just, for whatever reason, I don't exactly know why, unwilling to show in the candlesticks how out of control the situation's gotten. And so we identified it early. I was too much of a pussy to trade it at the beginning because I had no idea what was going on. It broke out the way it should have, and then it just got manipulated. The market got fucking crypto manipulated. They sent this thing down. For 2 days, everybody was just waiting for a taco that never came. It started to come and nobody believed it. The market was wrong for 2 days, and now we're here, and this thing is curling again. And I think the RR and the market being wrong here is just high enough for me to hold it. I'm not going to lose money on a trade. I trailed my stops up. My entry's 84, 83, something like this. And everything trades like crypto now. And so I don't know. I'm going to go into the weekend with a plan not to sell it. If things get ugly, if a ship gets, if the situation starts to change, I'm not afraid to just sell this. But don't copy trade me. Don't go off of my back. But I just feel like we monitored the situation from day one relatively accurately. We missed the trade. We got bailed out. I got bailed out to get back in, or to get in for the first time. And now I'm sitting in it and I'm thinking to myself, what are the expressions of the trade what are the expressions of the market is positioned for a taco and doesn't realize how bad things have gotten in the Middle East? What's the expression for that other than oil? I don't really know if there's a better one. Poly markets, maybe. I want more size. Gold, can't be bonds, right? Because it's like a lack of trust in the U.S. markets spiritually. And so I think it's just oil, bro, and maybe Bitcoin. I don't want to touch the fertilizers and shit because it's just too many layers removed. I don't want to touch high beta of high beta, you know? But we've just gotten to a point. Trump can't taco. He can't taco. And if we declare the war over, we're just like not done in the Middle East. We're not done in Iran. It's not over. He can't just declare it over. He can, but it's not. And every day it feels increasingly likely that this boots on the ground thing happens. I don't know. Like, again, I'm not a war expert at all, but we're just edging to it. They're sending fucking 2,500 Marines to the Strait. We're edging to it. We're edging to it. We're edging to it. And so I don't want to sell. I don't want to sell. I don't want to sell. And yeah, the bully loses power if you declare it over. Yes, it does. Yes, it does. And so the market looks like this. I don't know. That's my analysis. That's my analysis. I've been following geopolitics for about 10 days now. Is that right? Yeah, about 10 days. A little more. 12, 13 days now. And this is where I've landed, my friends. And I mean, that's about it, gentlemen. That's about it. I would watch these markets. It looks like a crazy manipulated meme coin. Yes, it does. And this is fucking oil. It's an oil market. Look at what it looks like. It's oil, bro. Everything trades like crypto now. New paradigm. The government's in the fucking order books. Everything trades like crypto. New paradigm, gentlemen. We're uniquely prepared for an environment where higher powers are manipulating markets. We just are. We're uniquely positioned for it, and we've entered it. So welcome. Welcome and congratulations. This stream is going to make a lot of fucking money in the coming years, months, weeks, days. We're going to make a lot of money. You think it's a good thing? I don't have a take. It just like is. It just is, honestly. It is what it is. I think you got to just identify it. You got to identify that oil is not supposed to move like this. Like, this isn't supposed to happen. Just identify that, and you're ahead. You got to accept it for what it is, identify it, and then we got to figure out how to trade it. We legitimately are. It's not a joke with future financial elites. Yeah, we legitimately are. Seems like a Jenny short squeeze in the making if they're manipulating. That's why I can't get myself to sell. I might be wrong. And I might round trip a lot of it's become a large trade for me. It wasn't. And that's part of the reason I was able to hold so long as it wasn't that big of a trade. It's become a pretty big one. I would watch these two things. This market right here. U.S. forces enter Iran, 63%. I don't feel like SPY is trading like we're at 63% over a coin flip to put boots on the ground, because that means we're going to be here a long fucking time in the Middle East. And then the ceasefire one. This one. These is what this I would trust this and oil is what I would watch. Is what I'm going to watch. Is what I'm going to watch. Because the lower this goes, and the higher this goes, the higher this is gonna fucking go. Really. Hyperliquid, best place to trade it. It's the only place over the weekend. This is another Russia-Ukraine situation. Yeah, it doesn't feel great, man. Also, the Bitcoin narrative is just uniquely positioned as well to do well in this. Check Trade XYZ. New tweet. They're awesome. Shout out to Shoku, man. Discovery bounds VT. Discovery bounds are price bands which check how far the market price may deviate from the last externally deviate. The mechanism gives traders market movers. The bounds width was mechanically coupled to maximum leverage, increasing available leverage. The bounds were static. Discovery bounds. I don't exactly know what this means. The bound width was mechanically coupled to maximum leverage. All right, I'm just gonna fucking type this into Claude. Let's just be real here for a second. It's fucking not trying to be a hero. I got real money in the line. Let me not try to be a hero. Buy now or wait for dip. I don't think you should buy now. I've been screaming not to buy it because yeah, your RR still is not great at this point. If you're in, you're fucking in and up. But the most powerful government in the world is actively trying to like cook you out of this trade. That's what you have to understand. R sucks here. Okay. There's solved. Traditional oil is a market close. The platform trades 24/7. So when something moves oil at 2 a.m., the market price needs guardrails. Otherwise, you get manipulation or cascading liquidations. Leverage and bandwidth were the same dial. So that was a flaw. Price at a band and it just froze. V2 fixes. Leverage and bandwidth are now separate parameters. Risk team can tune them independently. Bands are in static walls. They step. If price sustains pressure at the limit, the oracle gradually catches up and the band resets. So that price doesn't get capped both directions. Yeah, the prices won't like freeze at a random lever. The market can actually reprice to an event in increments. Got it. Surely if you buy this now and it hits 200, you have a nice profit. Bro, you understand what happens if oil hits $200? It can't even hit 200. It won't. It can't hit 200. You're capped. It cannot hit 200. It can't. They'll put a fucking slap a guardrail on your face. You're dead. Everyone's, yeah. There's no 200. There's no 200. Yeah. There's not. I agree. 150 feels like the top. Dad, what do you mean, bro? If oil's 200, SPY is like 0. We're not getting there. It's not happening, bro. So, all right. That's what I got for you guys. It's been, I'm not going to lie, guys. I'm going to get off the stream. I'm going to go to bed. It's been the longest 2 weeks of my life. It's been electric. It's been fun. It's been scary. It's been fun to like cover. Not fun things happening in the world. Hopefully we fucking get out of this spot. Even though I'm long oil, I fucking hope we get out of this spot soon. But chat, we've spent the last 2 weeks covering conflict in the Middle East. Do you feel like we've done a proper job? Like, have we done this justice? Seriously, have you needed to go elsewhere for coverage? Like, no, need you on the ground, bruh. I got a date tomorrow, by the way. Yes, I've learned so much. Good, bro. I got a date tomorrow. She finna know all about crude oil price. Believe that. She gonna know more about the war than Pete Hegseth. Date stream, yeah, you wish. So do you just stream all day? Yeah, her, the one that asked that. Believe that. All right, I'm getting off. I'm trying to figure out, by the way, like, how do I get a crude oil barrel shipped to my house? Like, how big is it? I have a lot of barrels long on Hyperliquid. They're only they're $97. Like, they're $100. How do I get a barrel shipped? Tulip King, I'm not playing it. Sorry, I'll play it on Monday. They're $100, bro. Like, I just want one barrel in the background. How do I get one shipped? How big are they? $42 gallons for $100? Stop. For $100? Oh no. Oh no. Where's that headline from? Where's that headline? Where's that headline? Where's that headline? Where's that headline? Wait. Where's that headline? Breaking ground stop at Washington Dulles International Airport. Damn, this is my home fucking airport, bro. This is like where I'm from. What is it? Is this the oil thing? This is dead ass where I'm from. This is my home airport. What? Wait, how much is a flight? I'm scared to look at Oh, it's wins, you fucking. Everyone started texting in the Telegram. It's starting, like the fucking. You fucking. Everyone's like, it's starting, like the fucking Walking Dead is happening, bruh. Meanwhile, though. Yeah, it's gross. It's fucking gross, guys. It's just lagging. All right. I'm leaving. Guys, I love you to death. I love you to death. I appreciate you guys. Thank you for showing up every day. Thank you for supporting the stream. I feel like there's like we're just like the stream chat, the pit chat is just like getting smart. Like I feel like you guys are leveling up. Everyone in this chat, I feel like is leveling up, bro. It's the same fucking heads in here every day, just like getting sharp, bro. Really getting sharp. Really learning some shit. I moved from YouTube for this chat. Congrats, bro. I love you guys. I appreciate you. Chief Risk Officer was crazy. They're just rapping fucking Stretch. I call him Stretch 2. It was wild. I'll see you in a Telegram this weekend. I got a date tomorrow, so don't expect much. I love y'all. I appreciate y'all. I'm out. Peace.